Why has the Bank of Japan wimped out? Yes, and believe it or not, the Bank of Japan doesn't like raising rates. They raised rates only for the second time in 17 years last Wednesday. So a week ago, here's the report from BBC News. Japan hikes interest rates for second time since '07. The Governor Uchida said, "We won't raise interest rates when financial markets are unstable." So they made financial markets unstable by raising rates.
Recently, the Bank of Japan, BOJ, raised its short-term interest rate to 0.25% as part of its efforts to normalize monetary policy. The Bank of Japan raised interest rates for only the second time since 2007, highlighting its reluctance to implement such measures. Despite this rare move, there are concerns about the bank's credibility, as the deputy governor stated that rates would not be raised during times of financial instability. Ironically, the rate hike itself has contributed to market instability, further undermining confidence in the bank's actions. CNBC Africa reported that Japan's central bank is hesitant to raise interest rates while markets remain unstable, according to the deputy governor. Despite a recent small rate hike of just 25 basis points, which brought the rate to 0.35%, the market reacted strongly, causing significant turmoil. The timing of any further rate increases remains uncertain. The Bank of Japan's influential deputy governor said on Wednesday the central bank will not hike interest rates when markets are unstable, playing down the chance of a near-term hike in borrowing costs. The speaker suggests that an everything bubble could burst through a currency collapse, leading to hyperinflation. In this scenario, as the currency loses value, prices for assets like stocks and real estate soar, giving a false impression of economic strength. This situation has been experienced in countries like Venezuela, Zimbabwe, and Brazil. The speaker believes this outcome is more likely than a deflationary collapse, where both currency value and prices drop. In either case, they advocate holding gold and silver as protection. Mario Draghi, an Italian economist and former central banker, known for his influential role in European and global finance, suggests that in the event of a currency collapse, whether through deflation or hyperinflation, traditional money may no longer be accepted. The speaker advises building strong community relationships, being kind, and developing skills or acquiring assets that can be traded for necessities. Many economists, including Mario, believe that gold and silver will always be accepted, especially during a currency collapse when traditional money loses value. The speaker believes Japan, through its central bank, is on a path to a currency collapse via hyperinflation rather than a deflationary collapse. We will present clips from Mario's video. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
This is from CNBC Africa. It was reported earlier today, 7 a.m. GMT. Bank of Japan won't raise rates when markets unstable, deputy governor says. So when are they going to raise rates? Because we've had a rate hike of only 25 basis points, and we're only at 0.35, and all hell broke loose when they did that. Everything bubble might be pricked through the currencies. The currency collapsing will have a very interesting effect that we haven't experienced in our lifetimes. People have experienced it in Venezuela and Zimbabwe and Brazil. And what's that experience? Well, is that everything seems to be going up. And the stock market, real estate, everything that has any value goes up and up and up. And everyone thinks, oh, the economy must be doing well. No, it's the currency that's like dumping. And that's what currency collapse or hyperinflation looks like. And I think I'm leaning more towards that than towards a total deflationary collapse where currency is also destroyed and prices collapse as well. Two sides of the same coin, hyperinflation and deflationary collapse. And the coin that you want to have, though, in that instance is gold and also silver. When the currency collapses, there will be no money that will be accepted, be it in a deflationary or hyperinflationary collapse. what will be accepted? Well, barter is going to be a good thing. That's why you need to have a relationship, close-knit relationship with your community. Be nice to people. Have some kind of skill that you can exchange for something that you need. Have some kind of asset that people want. Also gold and silver, because gold and silver will be accepted anytime, anywhere, especially when there's no currency around, because that's what's going to happen. And I think at least the Bank of Japan and Japan, they've chosen the road to currency collapse through via hyperinflation, not deflationary collapse.
As of 8:26 a.m. London time, spot gold is at $2,394, slightly up, while spot silver is at $26.90, down a bit. Stock markets saw a rebound, with the Dow, Nasdaq, and S&P futures up. But overall stability remains uncertain due to issues in bonds, commercial real estate, and market volatility. The yen is weaker against a rebounding dollar, and high-grade copper has dropped, signaling potential trouble in the global economy. As we're seeing sharp volatility in domestic and overseas financial markets, it's necessary to maintain current levels of monetary easing for the time being, Uchida said in a speech to business leaders in the northern Japanese city of Hakodate. Treasury yields rose again yesterday. The 10-year yield is currently up 3 basis points at 3.91%, while the 2-year yield is at 4%. The yield curve remains inverted by about 8 or 9 basis points. The yen has weakened again while the dollar is strengthening. This shift could help stabilize the markets, as seen in recent days. However, there's still uncertainty about whether the situation is fully under control, and it's important to continue monitoring the markets. The Japanese yen, JPY, recovers its daily losses against the US dollar, USD, on Thursday.
Where the markets are this morning, it's 8:26 a.m. London time. We've got spot gold at $23.94. It's up $3. The high has been 97 and the low has been 78. Spot silver $26.93. It's down about 5 cents. High's been 27.28 and the low has been 26.75. What about the stock market? Yes, it did rebound yesterday. Are we out of the woods? Well, there's a lot of different opinions. Some people, like wave analysts, for example, they think we've made the top, but it could go higher. It's always really tricky, and these things don't happen overnight. But suffice it to say, things are not really stable, not just in the stock market, but also in the bond markets, in commercial real estate. There is trouble out there. So right now, the Dow futures up 145, Nasdaq 100 futures up 58, and the S&P is up 17. The Nikkei in the aftermarket is down 500 points, or 1.5%. The currencies now, sterling is unchanged, the euro is unchanged. As I said, the dollar has rebounded quite a bit. It's up 1.2% now at 146.15. A stronger dollar versus the yen will probably help stabilize things, but even that, the volatility in that market is just like breathtaking. And when supposedly hard currencies get this volatile, that's a really bad sign about the overall system. That's what I think. What about the general commodities? Well, WTI crude is unchanged. It's pretty much where it was yesterday. Is at 72.64, and Brent is at 76.30. One thing I noticed is high-grade copper has come back down quite a bit, which is a sign that there's trouble brewing in the world economy. Copper is a very good indicator for economic growth. It recently had almost traded up to $5. Right now it's back to 4, which was a really important resistance. It's down 1.21%. Well, treasury yields again rose yesterday quite a bit. Right now the 10-year yield is up 3 basis points at 391. The 2-year is at 4 basis points, not 4 basis points, but at 4%. So the curve is still inverted there by about 9 basis points or 8 basis points. Is it any wonder that the yen has, has gone back down now? The dollar has gone back up. So we'll have to keep an eye on this, right? And of course, just like the carry trade was getting hurt, and that was hurting Western assets, now this backtracking by the Bank of Japan is probably going to help stabilize the markets, and it has to some extent in the last few days. But I'm not even sure we're out of the woods yet. And we're going to look at the markets in a minute.
Japan's recent decision to raise interest rates, though modest, reflects ongoing concerns about economic stability. The move aims to address inflation and stabilize the yen, but it has introduced new volatility in the markets. With the yen weakening and the dollar strengthening, the impact on global financial systems and investor sentiment is significant. While the rate hike may provide some stabilization, uncertainty remains, and the full effects of these monetary adjustments will unfold in the coming months. It is crucial to closely monitor these developments to gauge their long-term implications for Japan's economy and global markets. Share your thoughts on Mario's suggestions in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.